From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 19, 2017. Today we're going to be taking a look at the USDCAD, the US dollar versus the Canadian dollar, for today's trade analysis. First off, we want to recognize the fact that for the long term, going all the way back to April and May of this year, we have been in a downtrend. That's recognized by the long black trend line that you see on the chart. Falling from all the way up here into the 1.37s, close to 1.3800, all the way down here into the 1.2100 level. In the most recent weeks, though, we've seen a little bit of a change in direction as the market is starting pressuring back higher along the blue trend line. And right now, we're kind of stuck between these two trend lines. The bearish black trend line capping resistance highs for the past several days. The blue trend line showing the rising trend that's beginning to take shape here for the dollar CAD. Even the Forex Black Book has shifted its momentum to the green or the bullish side here for the dollar CAD. So we've seen some changes for this currency pair. The question is, are we going to see the break to the top side of the black trend line and a continuation higher? Or is it going to finally break down through the blue trend line and continue the previous downtrend? We don't know yet. Over here on the right hand side of the chart, I put this black box there because it represents the period of congestion, consolidation, or ranging that this currency pair has been in between the orange, the green, and the pink shaded areas that you see on the right hand side of the chart. Look back just a little bit further, you see this blue box back here, and you see the significant support that was into the orange shaded area, causing the market to bounce back up. So we want to take note of this area where the blue box is because we see resistance at the green zone and support at the orange zone. Why is that so important? Because that's the same place we are right now. So support at the orange zone, resistance at the green zone. Let's go ahead and zoom it in a little bit here on the daily time frame. And so now you can get a little better idea of what I'm talking about. The orange zone, as the market has come back down close to it for the past couple of days, has found support into that area here, and now coming close to it again today. Now, not quite all the way there yet. 1.2440, 2410 is that orange zone. Again, you can see the blue box in the orange zone on the left-hand side of the chart. Now, clearly, if it gets underneath the orange zone in the blue trend line, we would look for it to go lower. That's what happened back here on the left-hand side. But as long as it's above it, we have this potential for support. Interesting enough, I took Fibonacci from this last high right here, just where the black X is, down to the lowest low. The 0.618 Fibonacci retracement level of that little short downtrend sits at the orange shaded area. So we have some recognition with Fibonacci of that orange zone as potential support. Since we've gotten above it, it hasn't gotten back below it. So again, a breakdown of that would look for it to go lower, but as long as it's above it, we have this expectation that it could go back up again. So really, we're focusing our attention on the blue trend line, the Forex Black Book being green, of course, bullish, and the orange shaded area support, because that's where we are today. So as long as it's above it, we look for opportunities for it to go back up. If it gets below it, that's the risk in the scenario for going bullish here for the dollar CAD. Now, if you're looking to go short, you don't want to do it right now. Selling on top of the orange zone just doesn't make a lot of sense. You would need it to go back up to the green or maybe even the pink shaded area up here at the top of the chart before you'd look to go short, or the breakdown under the orange zone. So sellers are looking for rallies to resistance, pink and green, or breaks of the orange zone. And let's go ahead and put an arrow at the green zone just to represent that. And buyers are looking at this orange zone with some intent of looking for an opportunity to go long along the blue trend line and looking for it to go back up in the direction of what has been the trend for the past month or so. We're going back to the beginning of September. Let's take it on down to the 4-hour time frame. I want to zoom out one time like this. And so here we are on the 4-hour time frame. Again, take a look at the orange zone. We've seen support here, rally. Came close to it here, rally. Support again here, rally. So as long as it finds support near or close to that orange shaded area, we're looking for an opportunity for it to go back up again and take a charge towards the green or the pink shaded area. So what I'm looking for is dips. I'm looking for dips to 24.40, buying opportunities targeting the green zone or higher. Risk at that scenario would be a stop loss underneath the orange zone. We just don't want it to get underneath there if we're going to go long. One last thing that I was noticing earlier is that if I take a trend line just from the lows, I'm just going to put it on the lows that has been above the orange shaded area. You can see there's this little rising pattern to the lows. You have a low here, you have a low here, and now here we are again close to the 1.2440 level. So if that pattern continues, that rising pattern along that short blue trend line, we again are still looking for buys on dips. The risk, and there's risk in every trade, is that it breaks the orange zone and goes lower for the dollar CAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.